the US trade war with China is officially over. Except it's not. The Trump administration just announced a 90-day pause. And when I mean the trade war, what I mean is the most recent escalation of the trade war. You may or may not be aware, but this trade war really started in 2018, as in under Trump's first administration. And then a lot of those tariffs were left in place by the Biden administration, as well as new tariffs being implemented, like tariffs on electric vehicles. So this trade war has been going on for a while. Though the most recent escalation of this saw both countries, the United States and China, go well over 100% tariffs on each other. That, of course, slowed down businesses. There have been reports of shipment cancellations across the board. There are reports like Seattle saying that they don't have any ships in the harbor. This is because of that most recent escalation. Now, what has happened is that both countries have agreed to lower their tariffs to a base 10% on each other for 90 days while negotiations take place. Except for the United States, it's really actually 30% on Chinese goods because this is on top of an already existing 20% tariff, which is meant to fight fentanyl. So you have 30% from the United States, you have 10% from China. So let's ask the question of this video. Did the US accomplish anything with this escalation of the trade war? And more importantly, is the US better off? Well, that's what we're going to talk about. Hey everybody, welcome to my second channel where we talk about finance in a much more relaxed, casual setting. So with that said, as always, my name is Derek and I got my degree in finance, so you don't have to. Let's dive right in. So in reality, if we're going to ask ourselves, is the United States better off now than it was before, we kind of have a few goalposts. Are we going to ask ourselves, is the country better off than before 2018? Or are we going to ask ourselves, is the country better off than before 2025? Or are we going to ask ourselves, is the country better off than the most recent escalation of this tariff trade war? Now, if you ask the stock market, they must think that the most important goalpost is the most recent one because the stock market is rallying. It's up 4+% today on the S&P 500, and that's simply because the bulk of these tariffs since the last escalation have been paused for 90 days. But I want to ask a more important question. Is the United States better off than before 2025, as in before this most recent escalation? And then more importantly, is it better off than it was before 2018? Well, let's dive into those numbers. And in reality, I guess we have to look at this under two main lenses. One is the average American consumer better off now or before? And secondly, is the country as a whole better off now or before? So when we're talking about the consumer, really it comes down to the financial well-being of the consumer. When we're talking about the country, though, that's more a geopolitical question. Does the United States have more or less global pull when it comes to influence and soft power projection? Okay, so first I'm going to show you a graph so we can get some baseline numbers. Now, what you see here is the US tariff rate on China, and then the PRC, which is the People's Republic of China, their tariff rate on the United States when it comes to imports from each country. So what you'll see here is 2017, before any sort of US-China trade war initiated by Trump, the United States imposed a 2.7% average tariff on Chinese goods. Now, China imposed an 8% tariff on the United States when it comes to us exporting products into China. That is a significant difference. That is about 3 times higher than the US tariff rate. And of course, that's kind of the basis for Trump's tariff war. He said that China was taking advantage of the United States. But then if we look at the tariff rates post 2018, when the whole tariff war started, you'll see that they align a little bit more closely. 2023 being a good middle ground, it's after Trump's first presidency. During Biden's presidency, you'll see that the United States imposed an average of 19% on Chinese imported goods, where China imposed a 21% tariff on U.S. exports into China. So much more closely matched. And then, of course, you get into 2025, which is this massive escalation of tariffs. The U.S. imposed a 39% average, then a 73% average, then a whopping 164% average tariff rate, with the People's Republic of China keeping pace, 21%, then 55%, and then 146%. And of course, that brings us to today, where the majority of those tariffs have been paused. So China instead is going to impose a 10% tariff on all U.S. goods imported into their country, and the United States will import a 10% tariff on China. With that said, though, this is on top of a 20% pre-existing tariff meant to fight fentanyl. So what it actually comes down to is a 30% tariff from the United States and a 10% tariff from China. And now that we have those baseline numbers, I guess we can try to answer the main question. Is the country better off? And we're going to do this through two main lenses. One is the consumer and the other is the country. Okay, so the consumer first, because that's you and I. When it comes to the consumer, the overarching answer is, for the majority of Americans, probably not. And it comes down simply to prices and how the economy is structured. I've harped on this many, many times before on this channel because it is important. This country, the United States, is a service-based economy. 70+% of labor, 70+% of GDP comes from services, not from physical goods production. That means finance services, that means healthcare services, that means tech services, that means hospitality services. That means that 7 out of every 10, at the very minimum, Americans receive a paycheck from service-based GDP. So when you initiate tariffs, what happens to those 7+ out of 10 every Americans is that they will experience higher prices. Either A, because imports are more expensive, or B, because they are buying American-made goods, which are also more expensive because labor is more expensive. Those 7 out of every 10 Americans do not get a counterbalance or a counterweight as a positive to balance out the negative. They get higher prices, which with not much positive to counterbalance it. In fact, they might actually experience more negatives because these companies have to try to find ways to cut costs, like holding down payroll or potentially letting employees go. Now, with that said, the other 3, really it's about 2 to 3 Americans out of every 10, those might benefit. They're still going to experience the negative of higher prices. But if you bring back some manufacturing into the United States, especially if it is mid to high tier manufacturing jobs, that means welding, that means parts production, that means automobile manufacturing. Those jobs are decently well paying, and some of the communities that have been the hardest hit by us sending those jobs overseas might see some at least counterbalance to balance out the negative, which is higher prices. The fact of the matter, though, is no matter which way you cut it, the average consumer is likely going to be worse off than they were pre-2017, where the tariff rate was lower. Because if you ignore other inflation and you just focus on tariff-caused inflation, that means the higher the tariff rate, the higher the prices are going to be than they otherwise would have been. So, in my opinion, the U.S. citizen and the U.S. consumer is probably going to be in a net negative position than they were before we started this entire tariff mess in the first place. Okay, with that said, what about the country, the United States as a whole? Well, China, for all intents and purposes, is an adversary on the world stage. And people have argued with me when it comes to that why do they have to be an adversary? Why aren't they just a trading partner, etc.? Well, it's because their ideologies is counter to ours. They are not a Western democratic nation. They tend to align more with communism, which is a direct competitor to the social structure that the United States has. And in reality, it comes down to which one do you want to see flourish? Do you want democratically elected governments to flourish, or do you want governments that are really this pseudo-democratic kind of structure where the president is the president until they don't want to be the president anymore? The elections aren't really based in reality, and the fact is that structure is an authoritarian-based structure. So, is China an adversary? Maybe not the people, but the government structure? Yes, it is. It wants to project power locally, and it does want to compete directly with the United States on a global scale, both economically and militarily. So, in that instance, is the United States better off after these tariffs or this tariff war? Well, I would say that the results are mixed. Unfortunately, because the tariffs were not initially targeted just at China, instead, the tariffs were targeted, when we're talking about the most recent escalation of tariffs, they were targeted to everyone, foe and friend alike. And that damaged the US reputation with a lot of its allies. We're talking Canada, we're talking Mexico, we're talking Australia, we're talking the United Kingdom, we're talking basically every country in the European Union. So in reality, I think it's a mixed bag because yes, it sort of put pressure, economic pressure on China because yes, China has more to lose in a trade war because they export a significantly higher portion of goods to the United States than the United States exports to China. But because we also, instead of just shielding our other trading allies and partners, we just blanket tariffed everybody, or Trump did, I think that the results are a mixed bag. Soft power is probably going to diminish because our allies aren't sure if we're a reliable trading partner. On top of that, companies, foreign companies or US-based companies that do business abroad have also had to deal with this major uncertainty. And that major uncertainty hasn't ended. We have a 90-day pause on these tariffs. That doesn't mean that after these 90 days, they're just going to disappear. Maybe Trump does an extension. Maybe Trump initiates more tariffs. Maybe the 90-day pause only lasts 45 days because something else comes up. That uncertainty is really not good for businesses. Businesses want stability so they can plan for the future and grow. But on the flip side, in my opinion, I do think that the United States and the United States consumer does heavily rely on cheap Chinese goods. We have done so for decades. And if we're ever going to stop the fix of these cheap Chinese goods or potentially bring back some of those product manufacturing into the United States at a higher quality, then potentially there might have been something to gain here because these tariffs did put economic pressure on China. It's basically putting economic pressure, or in reality, when we're talking about 100+% on these tariffs, that's basically an embargo on trade. So you're basically isolating China from their main trading partner, which is the United States. And they do have a trade surplus with the United States, which means that they are a net exporter. So yes, this does put economic pressure on China. So then the follow-up question becomes, what was Trump's main goal? Was it to isolate China? Was it to bring back manufacturing into the United States? Was it to be treated fairly or more fairly on the world stage? Because he has at some point or another said each one of these things. And I'm still not quite sure. Because if it's to bring back manufacturing into the United States, then you would leave the tariffs, or you would leave some baseline high tariff like 25, 30, 40%. You wouldn't be open necessarily to negotiations because the whole goal is to bring back manufacturing. Yet on the flip side, if the main goal was to isolate China on the world stage, then you would leave the massive tariffs of 100+%, but you wouldn't inflict those tariffs on our other allies, which initially was done. And then if instead the goal was just to be treated more fairly on the world stage, then it seems to be a more logical path to just match tariffs for everybody. That means if China had an 8% tariff on the United States on average, then we do exactly the same. If the United Kingdom, for example, had a 10% tariff on the United States when it comes to shoes, then we would have done the exact same thing. So none of these goals seem to align with the behavior of these tariff policies and their implementation. So what exactly is going on? I mean, maybe you have a better idea than me. If you do, I would love to hear your thoughts and your ideas in the comments because debate is important. So then, to wrap up this video, is the United States better off than it was before 2025 and more importantly, before 2017? In my opinion, the simple answer is no. The US consumer is certainly not better off, and the US employee, 7 out of 10 of them, don't really have a counterbalance to higher prices to at least have some sort of positive. And that means for the majority or bulk of the country, no. we're not better off. But again, if you ask the stock market, we are better off. And that's because we're better off than we were 2 months ago. But I don't really think that that's the goalpost that we should be using. And then when it comes to the United States as a country, I think the results are mixed. I think we showed China that Trump is willing to inflict damage on both sides in order to get what he wants. On the flip side, I'm not really quite sure. But on the flip side, I'll be honest, I'm not really sure what Trump wants. I do know what businesses want, though. They want stability. So we'll have to see if, over the next 90 days, some form of actual true agreement between the United States and China is reached, formalized, and put in writing. I hope this video was informative. If it was, please consider subscribing if you haven't already. If you like this more casual, laid-back way of talking about finance and economics, then you are in the right place. If you want a more structured, formatted video where there's more cuts, more edits, more charts on the screen, then definitely check out the main channel. That's just my name, Derek Polishek, and we do videos there every single week. With that said, I hope you have a fantastic rest of your day, and I hope to see you around for the next video. Until then, take care.